Secret Wars. All right, XFN on the TSX or TSC, Toronto Stock Exchange. And that's a ticker for it's the iShares S&P TSX capped finance. So that's what it is. And this caught my attention because right now, let me get me some black space. I see in the cards a top tracing out. So right now we've been in stage 2, stage 3, where the violation of 30-week moving average, and then a continuation stage 2. Is there enough breakout volume to justify that entry? Let's check it out. So here's probably the breakout candle, right? This one. And here's the volume that we had for it. It's that second candle right there. Look, there's not twice as much. It's not twice the average volume of the previous 4 weeks. Maybe 20% more. So I'm not sure would have played that. Maybe not an A+ setup. Remember, you want A+ setup. You want breakout above a horizontal line above the 30-week moving average. Check. You want twice the average volume for the previous 4 weeks, and you want RSI going over the midway point. Check. Not check. And check here. And then there's the A++ setups, and I added that extra plus. It's for using the Ichimoku cloud, and you see there's no red cloud, there's no resistance above, so that's the extra check mark. So, well, you've went in. Depends how tired you were of waiting, how your emotion was, what your patience was. And that's why you have to keep looking at the charts to wait for those A++ setups if you weren't sure. So that was it for there. Worst case, you just would have passed by. You wouldn't have went in. And a little later, would have been a trend line. A little later, you would have been triggered out. Either back at 30-week moving average or back at I look at the RSI for U shape or V shape, and it gives me an indication of where the price action pulled back. You could maybe move your sell stop under here, but that's a very, very shallow pullback. Like Stan says, pullbacks under 7%, omit them. I don't use that to a T, but it gives an indication pretty much, right? If the price action moves back, what is that? $1. That's 2%. You might not have moved your sell stop back. You would have wanted a more substantial pullback like here, right here. Either case, you would have exited on the 30-week moving average fell, or if you could have drawn the trend line. You had 3 valid points, not from here. 1, 2, 1, 2, not really. So that trade might have just, you might just have failed out here at the 30-week moving average. And here we are today. We're under 30-week moving average. It's starting to slow down because there's price action under it, pulling the average down. We seem to have some support right here around the 30, and I'm going to put my alert right there, 36.75 level. And you have some resistance right here at the 38.15 level. But I don't want to play a breakdown right now below that because of the Ichimoku cloud, that support, but slowly it's starting to vanish, right? Because it's projected 26 periods in advance. And you see in a few more, 1, 2, 3, 4, 5, maybe in 4 or 5 weeks, if the price moves around it and it gets shallower and shallower, we might have a break here a little later on. Or you could have a break from here that just goes and closes under the Ichimoku cloud, and then we're in. That means you see all the support here that's protection in the future, it's gone, and you don't have that support anymore. It's clear steam for a nice stage 2, maybe a little pullback on the light volume, and then all the way down to who knows when, until the price starts reaching the 30-week moving average and starts flattening it out, and then you get triggered because of a trend line or because you have a violation of the 30-week moving average. And that's pretty much how Stan goes, right? I've been doing this for a little while now, the Stan, revisiting it, and it's always the same thing. 1, 2, 2, 3, 4. But you see, that's a trend line that's close to a 30-week moving average. It's not really giving me a big edge. 1, 2, 3. It's not for this chart. It's hard to draw that trend line, but I like to try to draw it, and I like having that exit. Usually, when the trend line is violated, I go in the stock either reverses, slows down, goes in a sideways move, and it's all good. I take my money and put that risk somewhere else and just wait for another breakout, another consolidation, and another triple confirmation to re-enter on my terms. On terms that the chart is going to give me the most push to go towards my target or my direction and not get whipsawed and save time. Last thing you want is get trapped, jumping the gun too early, or you don't have the volume and then the price action just stagnates around that breakout line. What am I going to do? Do I stay? Do I sell? Then you sell and then the price goes up. All that starts going into your brain, and it's just a wreck. It's just a minefield, emotional minefield, and you'll just step over all types of and take wrong decisions. XFN. All right, what am I going to do next? I'm going to also set an alert at that lower resistance, so that support. When that's breaking 36.75, I'm going to keep a good eye on it, and once I have a candle close below that moving cloud, that's my stage 4 candidate, man. XFN. Let me just see what I have here. See these bars, man. I don't know why my software does that. It might be a threshold I could put to not have these crazy bars there. Or did the price action really go? Did the price action really go all the way down here for that day? Or I don't know why there's that noise, technical noise there in that candle, because it kind of skews after that the Ichimoku cloud. All right, I'll open a support call with Interactive Brokers, see what's up with that, man. But nevertheless, this is nice. And even on the technical chart, seem to have a huge top. Boo. Is that left shoulder, head, maybe right shoulder forming here. Let's go give it a little look on the monthly. And the monthly trend is Very important. There we go. So the monthly support is the same here for that final breakdown. It's at around 35. And right now for this top pattern, you see the candles. The real breakdown line. We're close to it. So we're really on the, I don't know. See, there's less candles on the monthly. There's less patterns to play. And on those smaller candles, each monthly has four weeklies, and the weeklies have those dailies, and then you have more candles, and then you have the patterns. So right now, this is, if I wouldn't have looked on the weekly and I'm just doing my classical trading framework, I would have not even drawn those lines there. Here's how I would have drawn it. I would just have seen here the support, and I would have seen here the resistance. Always excluding the wicks, because the wicks is intraday noise. It's closed on the weekly or daily candles within that, but at the end of the month, the market rejected those closes of those weeklies, overriding them by closing the monthly bar at a different level. And that's the real support, the stronger prevailing support. And if you don't recognize it and you're on the weekly, and then you have a target that goes through that support, then you might get slowed down. You might actually have a bounce, and you might have the breakout. Oh, I'm breaking out. But finally, you're just in that wick. And what happens at the end of the month? Price action sucks you back above that support line. So always check out the monthly candle close and opens to draw your lines. At least you have the truer picture of the prevailing trend, and you won't get caught. So this is probably mostly the pattern that's I see forming. Is this a nice head and shoulders pattern on the monthly candle chart? If it doesn't break down and bounces one more time off 35. And I don't think you want to do anything else other than that for now. I'm going to set those orders there. And let's get back to Stan. My little Stan setup on the 5-year weekly. And that's how it lines up here. You see that noise? Those candles that close above? Well, that's the noise and the wicks. In the weekly, you would still put the alerts. The resistance on the weekly is really this one. But the true resistance was a little bit below. And that's why the price actually went up and got sucked back in. It's because the monthly close decided that was a true resistance. There's a lot of examples on my YouTube channel in anything that's not Secretwars. I really deep dive in it in my classical trading framework. You could go to batcharts.com, and there's my how-to, and just it's like a which way book. Start clicking on links, and it explains the noise reduction properties of the monthly candle, and why it's important to, or why I do things the way I do them, to not get whipsawed. And here is just a coincidence that the close of these weekly candles is the same as the monthly, and there's no noise below. Even better, you have synergy across the levels. And that's it. Always consider that before having a breakout. When you have a breakout on the weekly, or if you have a breakout on the daily, then look on the weekly if you're just part of a candle's wick, and see where really the support and resistance are. And then from the weekly, go to the monthly like I just did. And you see with the monthly, it matches up well with the resistance levels. That's going to evaporate soon. Look, XFN, it could be a top forming. And if not, if ever I get my 3875, 3881 alert triggered, then forget that. It becomes an uptrend, continuation, stage 2, and we're all good. We're above the green cloud, and that means we're an uptrend. So that's it. When I'm looking now, yeah, that's about it for XFN, guys. Stage 4 candidate possible, and definitely in a stage 3 right now. Trying to work its way out. All right. See ya.